Good evening. Sky News has learned that Home Retail Group, the company that's the subject of a takeover approach by Sainsburys, is in advanced talks to sell the home-based DIY chain. Sources say a £350 million deal could even be done with the Australian retail giant Wesfarmers in time for it to be announced alongside Home Retail's trading statement tomorrow. The deal could then see Sainsburys buy the rest of the group, which includes Argos and Habitat. Well, Phil Dorrell is the managing partner of consultancy Retail Remedy. Phil, your reaction first to that news?
Reaction to the fact that Wesfarmers might be buying Homebase, I think that would be an excellent deal. Certainly, I think Sainsbury's would be welcoming it. Certainly, they want Argos rather than Homebase, so it would be a good thing for UK retail.
Yeah, it makes it a cleaner deal, I guess.
Very much so. And Wesfarmers are good operators. They operate 300 Bunnings stores in Australia, and they do a great job.
Worth pointing out, though, it's $350 million for Homebase. When Sainsbury's sold it to Permira back in 2001, I think it was valued about $960 million.
Yeah, it's gone down a little bit, but 350 is probably a reasonable price for it as it now stands. The market is reasonably saturated, and B&Q are a big player in the market now in the UK.
Now, obviously, Sainsbury's updated the market today on their Christmas trading. More on that in a moment, but most of the call was spent elucidating on the rationale behind buying Argos. Do you think the market's warming to this deal?
I think initially there was some shock, and that was reflected in the share price. I think since then there's been a lot of work by Mike Coop and the Sainsbury's board, talking it up, telling about how the synergies will work, talking about the fact that there's a lot of synergy between the customer aspects of both customers. So I suspect that they're now at a point where it's reasonably neutral.
There is Mike Coop there. Big roll of the dice for him. I mean, his predecessor, Justin King, never did anything like this in a decade.
No, this is really brave, and there's no doubt about it. And you've got to look at the market and say that the UK food market is really under a little bit of stress at this point in time. You've got the discounters in, they're really hard on price. You take price down, all of a sudden margin starts coming to be a big issue. And the hunt for margin is clearly one of the things at the back of Mike Coop's mind.
Yeah, and obviously that fantastic distribution base that Argos have, which he has described as best of breed.
Yeah, and I think it probably is. I think that the way that they are able to distribute smaller packages of stock to smaller units is something that Sainsbury's currently haven't got the skill set for. That is the future, and undoubtedly it's something that Mike Coop will value.
What about the price? I mean, Argos, Home Retail Group's current market cap is about £990 million. Talking the market, they might have to bump by 500 million. Can Sainsbury's afford that?
That is to be seen. I think they probably can. The problem with Sainsbury's is the fact that they're looking at this saying, we can do the deal if we can offload Homebase quickly. Yeah. Now, what we've got coming in is Wesfarmers coming in saying, actually, we'll take that off your hands. I'm quite sure those conversations have been happening for a long time, and that this is not coincidence. All
right, Phil, briefly, sales down very slightly in the Christmas period. Morrison's were up yesterday.
Yeah, they are, but I think it's pretty... I've got to say, I think that Sainsbury's have done a fantastic job over the Christmas period. Their mod campaign clearly worked for them. They had a negative 0.4 like-for-like, but a 0.8 growth overall. And I think they'll be pretty pleased with that.
All right, Phil Dorrell, we'll leave it there. Thanks for joining us.
Pleasure.